Well, welcome back to another episode of Finance Uncut. On today's episode, Warren Buffett says that the stock market is broken. And coming in from the Sydney Morning Herald, we've got major banks to stop accepting COVID-19 mortgage holiday applications. And this has been my argument right through 2020, is we really haven't seen the damage from the government lockdowns and the recession that we've had, because we've had all sorts of government and central bank intervention. We've had in Australia mortgage holidays where we got up to about just over 11% of all mortgages from memory that were allowed to take these holidays where people didn't have to make repayments on their mortgages. That's come down a lot now. I believe it's around 2.2%, which is still, I think from memory, about $66 billion worth of mortgages. I'm sure someone can fact check me there, that are still being on these holiday periods. But the banks aren't accepting that anymore. People are going to have to start paying. And if you can't pay, well, you're going to have to sell your house before the bank does it for you. But my argument is we're going to see where the economy stands on its own 2 feet this year. The people taking money out of super, which was in the tens of billions of dollars, that's done. That's finished. JobKeeper, that's all but finished. Job Seeker, all but finished. Trading while insolvent, moratoriums, finished. In fact, we've seen a spike. I think I saw about 28% spike in this area of businesses going into liquidation. So 2021, we're going to see where the economy stands on its own 2 feet, which is going to be very interesting. And coming in from the Wall Street Journal, Warren Buffett says that when investors forget fundamentals, the market is broken. And Warren Buffett couldn't be more right with that statement. We can see here the S&P 500 versus corporate profits after tax. And, well, I think it's pretty obvious that we are in this crack up boom. The market is broken. It's not running on any fundamentals of any sort. I should have had a chart that shows the retail call options. This is, mum and dads. This is, your retail. This isn't your big institutions. The call options, and the chart of that is just insane. It's somewhere between, I guess, a spike. In fact, it's very similar. If you have a look at the S&P 500, you see that chart moving up. It's very similar to that when you have a look at the retail call option volume. But Warren Buffett's right. We've got a crack up boom. And when you have a look at the Tesla chart and it goes vertical, that's a bubble. I don't care whatever you want to think, whether you're madly in love with Tesla or Bitcoin or Bitcoin, some people are saying. It's a bubble. It's a bubble. It's a crack up boom. And the crack up boom develops out of the same process of credit expansion and resulting distortion of the economy that occurs during the normal boom phase of the Austrian business cycle theory. In the crack up boom, the central bank attempts to sustain the boom indefinitely without regard to consequences such as inflation and asset price bubbles. Problem comes when the government continuously pours more and more currency, injecting it into the economy to give it a short-term boost, which eventually triggers a fundamental breakdown in the economy. In their efforts to prevent any downturn in the economy, monetary authorities continue to expand the supply of currency and credit at an accelerating pace and avoid turning off the taps of currency supply until it's too late. And that is a crack up boom. And that is exactly what we're in. And well, I've shared this chart with many people before. But if you want to have a look at the cause of wealth inequality, go back to what happened in 1971. And that wealth inequality today is just getting worse. As we can see, American billionaires have got richer during COVID-19 while people are losing their homes, getting chucked out on street, can't afford their rent, can't afford to pay their bills. Small businesses have had their businesses shut down, locked down. People have lost their jobs. The billionaires, they got richer. They got richer. It's our economic model that's the problem. Socialism is not the answer, and I'm still going to get around to doing a video on socialism because there's so much misinformation out there about that. That's not the answer. The answer is free markets. It is free enterprise. It's sound money. It's sound money, not fiat money, not this fractional reserve banking system that we've got, which makes the bankers and the big end of town wealthy, while devaluing the savings and the workers. Check out my video on inflation on my channel here. Check out my video on inflation. And I give details about what John Maynard Keynes, and that's the economic system that we're under, when he talks about inflation, where we debase the currency, and the workers don't know because they're too dumb. He says basically, that workers are too dumb to realize that we're stealing from them. They think it's great, we've got low unemployment, but we're stealing from them at the same time. Check out my video on inflation. Ludwig von Mises, the great Austrian economist, says there is no means of avoiding the final collapse of a boom brought about by credit expansion. The alternative is only whether the crisis should come sooner as a result of voluntary abandonment of further credit expansion, or later as a final and total catastrophe of the currency system involved. Now, we saw from the GFC that governments and central banks around the world decided that rather than abandon the further credit expansion, where we take our medicine, instead we'll just inject. So it's like a drug addict, cocaine addict, crack addict, whatever. Instead of giving them the medicine so that they can come down on that and be healthy, what they do is they inject more crack into the patient, and eventually that crack's going to kill them. And that's what Mises is saying here, that if we continue to expand credit, currency and credit, then we're going to have a catastrophe, and that is the dollar. That is the dollar. And for mine, governments and central banks have shown their hand. They won't allow deflation. They won't walk away from the further credit expansion and currency expansion. So I think it's pretty obvious which way they're going, and that helps me personally put together my portfolio to protect myself from what is going to happen. And so where am I? I love the gold and silver miners. I've never held such a high percentage of my portfolio in this sector. In fact, today, as I record this, my second largest holding is up 90% today. 90% in one day. I have had, and go check out my video that I did just before Christmas in 2020, my investment thesis. Go to part 2, I think it is, where I talk about my results. I share my results in my portfolio. Go to that's part 2. Part 3, I talk about where I'm investing, where I see opportunities in the future moving forward, and you'll get an idea of where I'm positioned and where I'm positioning moving forward. And just this week, I've bought more gold and silver miners and explorers. Last week, bought more gold and silver miners and explorers because from the mining point of view, they are so undervalued. When you look at their free cash flow, when you look at their balance sheet, people aren't looking here. People are looking at the Teslas and the tech stocks and Amazons and all this, Bitcoin, you name it. That's fine. See, what I like to do is I like to buy dollars, dollars for 50 cents. And if I buy enough dollars at 50 cents, guess what? I create wealth over the longer term, even though I'm doing very well in the short term as well. But this is what I like. I like buying things that are cheap, that are undervalued, that people aren't paying attention to right now. Silver's one that I've shared before. When I look at silver on all different metrics, it's still 50% off its all-time high. It's still, to me, very, very cheap. And I'm still buying. In fact, just the other day, I went and bought some more physical silver coins and bars, and I think I found a very, very good Silver Explorer, which I've been heavily investing in, and already just in the recent time since I've been investing in it, it's been doing extremely well. I actually don't want it to do extremely well yet because I want to buy more of it. And now that Biden is the president-elect, with the whole Green New Deal and the green movement and the electrification of the economy, I think silver and other commodities are such a great play. And commodities have never been this cheap. Commodities are so cheap at the moment, and that's where I'm investing in. Commodities that I believe will do well in this greenwash that we're heading into. Things that are cheap, things that are beaten down. I shared that I bought, in previous videos, I bought a coal business for under 2 times earnings. A shipping business. Now, I should have shared some charts about shipping. Shipping has gone up. Shipping rates are going up, which means revenues for shipping companies are going up. Yet I've just bought a shipping company for also under 2 times earnings. That's 2 times earnings. Why no one's looking in that area? Well, some smart people like Jim Rogers, billionaire investor Jim Rogers, one of my favorite all-time investors, has been buying shipping businesses. So while everyone else is out there buying Bitcoin, buying Tesla, buying Amazon, buying anything that's going straight up at just ridiculous multiples and PEs, I'm buying beaten down, cheap, unloved businesses which produce tremendous free cash flow. So anyway, what do you guys think? This is my opinion. Not giving financial advice. Don't listen to me. I'm just a guy on YouTube. I don't know what I'm talking about. So, but what do you think? What do you think? Where are you guys investing? Where do you guys see opportunities? Love to see your opinions in the comments below. If you like the content I provide, please hit the like button. It does help get the video out there to more people. Definitely comment, engage, share the channel as well. It just helps get this content out to more and more people. So I just want to be honest and share with all of you what I think is happening, how I'm managing my portfolio, where I see the opportunities, so that hopefully I can give you guys some good information, some good content to think about things for yourselves. Look at the other side. I'm not always right. There's always 3 sides to a coin. There's heads, tails, and the edge. And personally, I like looking at all 3 sides. So anyway, guys, thanks for joining me, and I'll see you again on another episode of Finance Uncut.